Hey, what's up, my friend? So, welcome back to our weekly video analysis, right? We just basically concluded Traders Fest. So, if you're new to, to what I do, so basically what happens is that, each week I post out a video, right, sharing my thoughts on the market, right? I focus specifically on the forex and futures market. I don't do stocks. I don't do options, ETFs, etc. Right? Mainly is the forex and futures market. So I just share my thought process, right? The markets I'm looking to trade, why I'm looking to trade, how I'm going to manage the trade, right? We talk about psychology, risk management, and a little bit of tidbits each and every week, right? The main focus of this video is to watch this video on a weekly basis, and then towards the end of the video, you think, man, I learned something today, right? That is my goal, right? I want you to say, man, I learned something today. So, I mean, that's the point, right? What's the point of you, watching me talk for 15 minutes and, at the end of it, you kind of like realize, what the heck's Rayner talking about, right? It's just wasted my time, blah, 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 right? So I don't want to waste your time, right? If you spend time watching this video, I want to make sure that you got something out of it. Fair enough? So anyway, back to this week's market analysis. We'll be looking at three markets, right? Namely the Aussie dollar, 30-year treasury bond, and I'm really thinking hard, what's the last market I talked about? What was it? Dollar Mexican. Yeah, it really, took me a while to got that last one down. Dollar Mexican, right? Aussie dollar, 30-year treasury bond, and the dollar Mexican. So all this and more in this week's video, right? I'll see you there. Okay, so the first market we are going to talk about is actually the Aussie dollar. So you can see my chart is clearly it's just only with price, right? Just candles. So because I just want to take this from an approach of, naked trading, right? Something that we spoke of, I think, a few videos back, right? In our earlier weekly market analysis over the last few weeks. So let's start off with the big picture, right? I always like to analyze the charts on the weekly time frame just to, have a sense of where we are in the grand scheme of things, right? So on the weekly time frame, the Aussie dollar, right? Just a disclaimer, right? I'm primarily a swing and position trader. So if you're a day trader, the weekly time frame is actually quite irrelevant to you. So it's very important to understand what type of trader you are and then define your higher time frames accordingly, right? For example, if you're a day trader, the higher time frame could be the 1 hour time frame for you, or maybe as high as up to the daily, right? The weekly is pretty much irrelevant if you ask me. But because I'm not a day trader, mainly a swing and position trader, so the weekly is actually relevant to me. So bear this in mind. So anyway, back to the Aussie dollar. This is the weekly time frame. You can see that this market is pretty much still in a long-term downtrend. Right, you can see a series of lower highs, lower lows. But recently, what happened is that it broke above this area of resistance, breakout, retest this previous resistance, now turns support, and then it rallies from here and it has entered into this range period. Okay, so the big picture is that this market is still towards the downside, but in recent times, right, we are entering a period of a range market where it could possibly really go anywhere, right? It could possibly go higher or lower. That's anybody's guess, but at least you know where you are in the big picture. So maybe I can just draw some lines, right, for some relevancy. I'll put this as a red color since this is a weekly time frame resistance. So that's usually what I like to do, right? If you see my charts is red color, it usually means that those are SR levels, support resistance levels from the weekly time frame. Okay, so I think these two are pretty obvious for now. I won't really go and tweak those lines or find more because this is not the objective of this video, right? It's more of the weekly analysis. So back to the daily time frame, I like to see again, right, where are the support resistance area, right? So for this one, maybe I'll just fine tune it to get as many tests as I have, right? One test, right? Almost just 2 tests over here, 3 tests, and this is about 4. Okay, so let's do the daily as well, right? So the daily, I like it to be black line. Right, so this tells me that this is the support resistance on the daily time frame. So again, we have a few tests, right? 1 test, a false break, 2 tests, 3 tests. So here's the thing right now, right? Right now, Aussie dollar, right? Since we saw our buyers, right, in recent times, it has entered into a period of range. So you can see that on the daily time frame, it's still, somewhat rangy with the bulls still in control after all, because I think you can see, a series of higher higher lows, higher lows, higher lows, higher lows, with price being contained by this area of resistance. Okay, so my bias for this market is actually, to both long and short is pretty much okay, if you ask me. All right, but for those of you who recall, right, you can actually use the 200 period moving average to help you define the trend more objectively. Because I know this requires a little bit of, let me get rid of this line first. This reading of this market, whether it's an uptrend or downtrend or range, it can be a little bit subjective because it really boils down to experience, seeing what the market has done, where are the key areas to look at. So there is some subjective element to this. So if you want to be more objective, right, just get the 200 period moving average. This is something that is way more objective. And you can just use this as a filter. If price is above it and the 200 period moving average is pointing higher, then the trend is up and you can only choose to go long, right? So you won't go short. So this is to ensure that you're trading with the trend. But again, I'm not saying that you can't go short over here or that it's wrong, but rather this is just to, help you simplify your trading if you need some simplification. Okay, so anyway, the 200 MA is up. You know that it has come into this potential area of support. So this adds an extra confluence that this level is something that you want to pay attention to. All right, on top of it, if for those of you who use trend lines, right, this is again, I think, is pretty key level to look for. So for this Aussie dollar, this is a level that I want you to pay attention to. All right, we could expect a reaction in the coming week, right, and see what happens next. And right now, this means that you can see that the Aussie dollar has actually, has sell off from this high over here. So if you want to go short right now, for me, it's not really my cup of tea, right? And here's why, right? If I were to go short right now on Monday, you look at it, right? I have to go short, assuming the Monday opened over here. My stop loss would go above this high, right? And this would be my risk. And coming lower, right? I would say, that somewhere here is an area of support where the buyers, or rather the bulls, could potentially come in and push price higher. So over here, I would say if you want to have a target, this would be a very conservative approach, right? Which is a good level to target. So from a risk to reward standpoint, it is not really very attractive, right? So if you ask me, right, if I want to go short, I would prefer to have done it much earlier, perhaps somewhere in the middle of this bar while it's still forming and getting an entry on the lower time frame. When it's over here already, I would just skip the trade altogether. So anyway, so the plan next week is to see for this market to come down lower into this area of support. And what I'd like to see is for a weakness on pullback on the lower time frame. Again, this is something that we have spoke about, I think, quite often in the earlier videos, right? Basically looking for a break of structure on the lower time frame. So if that happens, right, I'll look to get long, right, with price possibly retesting back towards this highs over here. So this is my take on the Aussie dollar. And bear in mind that support resistance is an area on the chart. So it does not mean that, price will come precisely to this level and then bounce off from here. In fact, I think this is a whole level that you want to pay attention to as an area, right? But for me, I'm very comfortable with just having lines on my chart instead of, having green boxes. So, but this is just me. If you prefer to have, draw it as a zone, then, it's up to you. Okay, so this is my take on Aussie dollar, right? We'll see what happens next in the coming week ahead. So I just want to walk you through a couple of setups that I actually mentioned before I left off for Traders Fest. Okay, so the one that I want to talk about first is this 30-year, right? If you recall, before we had Traders Fest, we did a weekly video and I mentioned that this was a level to look out for, and I was looking for a weakness on pullback on the lower time frame, right? But it did not happen, right? So let me explain why. So let's mark out this area. Let me use this tool instead. This candle over here, right? So a lot of traders, they're gonna go long. They're gonna go long, right? All right, man. Look at this area of support, bullish, doji price rejection or whatever pattern you call this, right? Somewhere between hammer and doji. I don't really know what's the specific name for this. So they're gonna go long and then stop loss below this low, the stop loss, and then it gets stopped out. All right, but I didn't go long because, again, as I've said, I like to enter my trade on the lower time frame to read the price section of it. So if you go down to the lower time frame, the 1 hour, all right, so you see that what's actually happening is this candle over here. Okay, so this over here, from this all the way, I think, here. Okay, from here to, where's the 7th? Here. Okay, this over here. Here to here is basically, right, I believe this should be right? Here to here is basically the price rejection or that doji looking candlestick pattern you saw on the daily time frame. This whole range over here. And if you look at it on this lower time frame, does this, let me push more towards here. Okay, let me give you a more objective view. Does this look like the trend is coming to an end? I mean, you still have a series of lower lows and lower highs, right? You look at this, right? Lower highs, lower highs, lower highs, lower highs, lower lows, lower lows, lower lows. What makes you think this is going to, the trend is going to reverse? Okay, and I think this is something that I've learned, in recent years, that it is a low probability trade, right? When you are trading like this, right? Because traders are memorizing these patterns and they say this specific candlestick pattern is bullish in nature. If I see this on a chart, if I see this at area of support, it means I should go long. But no, right? Because if you look at a lower time frame, there is no clue at all that the market is about to reverse to the upside. And what do I mean by clues? At least the most basic fundamental clue is at least to get, a higher high and a higher low if you want to go long. That's the most basic fundamental price action structure. Okay? And needless to say, traders got stopped out over here, right? So anyway, that's my point, right? Be careful of just trading these candlestick patterns in isolation. Okay, so yeah, I didn't get long on this. All right, so anyway, back to the daily time frame, right? This price is now over here. But what's interesting right now is I want you to go up to the weekly time frame, and you notice that the market has been respecting the 50-period moving average pretty consistently. Don't ask me why. I have no idea why it's respecting the 50-period moving average. But the thing is that since it tends to respect it, I would say this could be a potential area of value where the market would trade higher. And on top of it, this is also, all right, we are near this area of, let me do this again. Okay. Right, somewhere about here, right? Not as close as I would like, right? But, possibly this area of support over here, right? Remember, support is an area, it's not a line. So this is possibly an area of support where price is currently. So we have the 50 EMA, we have this area of support, and again, right, I'm not going to go long, because, prices close bullishly like this over here, right? So what I like to do now is go down to the lower time frame and see whether the price action will tell me that, there's a more likelihood of it, reversing towards the upside. So now I'm on this 4-hour time frame. Why am I not on the 1-hour time frame? Because there is too much, there is a lot of price here and it's a bit hard to read. So I'd rather have a summary version of what has happened by going to the 4-hour time frame, right? After all, I'm trading this weekly level over here. So the 4-hour would be just nice for me in this case. So what I see over here, right, we have this potential highs over here. I think this is a key high to look out for. Why is that? We have previous support, then price, rallied, came back down, test, bounce, break, retest, come back down, retest this previous support and resistance, come down lower, and right now it's chopping higher back towards this key level once again. Okay, so my idea for the coming week is to see if price can give me a build up. So what is a build up? So basically, if you studied the earlier videos I did, right, talking about breakouts, I like to see build up where price consolidate near the highs over here and then it breaks out higher. Why do I want this? Because I know that if price were to consolidate near the resistance, what are traders going to do? Well, the textbook says if price comes into area of resistance, you put your stop loss above the highs, right? Because resistance is an area you want to go short at. So that's what a lot of traders will do. So since I would guess they would do that, and I have a bullish bias from the weekly time frame, I want to get long. So basically, those traders who go short will be the traders I'm profiting from. And this is something we spoke about, how to find your trading edge, again, earlier video. So a lot of things that I think we've come so far, it's all built upon the concepts that I've spoken of, some time back. So, if you're new to this, right, I would advise you to look through my earlier videos. Then you have a really solid understanding into how I trade the markets, all right? It's I don't know, man. I think if you study all my videos, right, you can even make it into a course, right? So yeah, right, take the time to study through it, right? It's a lot of videos, I know, but, if you are serious about your trading, right, this is something that, you can put some time and effort into. So anyway, sorry, I digress, right? I'll be looking to go long, right, if you have a build up and price breaks above this area of resistance. So there's my plan for the 30-year treasury bond. Right, and lastly, I want to share with you a trade I took and that I got stopped out. Because after all, what's the point of showing you winning trade after winning trade, and all my losses are being covered under the damn carpet? So okay, of course I have losses as well, right? No matter how perfect the analysis is, right, you're gonna have losses from time to time. This is the fact of trading. So anyway, let's talk about the dollar Mexican. All right, so the dollar Mexican. All right, so basically again, it was mentioned in the last 2 weeks, right? The video where I say I wanted to go long on the dollar Mexican. So this was the level I was looking at, right? Pretty straightforward, right? We are in an uptrend, right? You look from left to right, we are pretty much in an uptrend, right? This was the area I was looking at. Previous resistance, turn support. So what happened is that when the market opened last week, it basically, a gap down over here. So I went down to the lower time frame, and I was looking for a market to tell me that the bulls may take control. So at this point in time, I noticed that, okay, on this 1 hour time frame, I noticed that, okay, we are entering into a period of range. And I thought to myself, if price can break above this high, then there's a likelihood for price to actually, reverse higher. Because if you look at the big picture on the daily time frame, we are in an uptrend, and price is at area of value, right? At the previous resistance turn support. And now on this 1 hour time frame, I'm seeing something bullish over here. You have a series of higher lows over here. And we have this small little build up over here. So I went long with a buy stop order above this high, stop loss below this low, and what happened? Boop, I got stopped out. Right? There is no point feeling sorry for yourself. It's just one trade and move on. Right? And to be honest, right, this trade may rattle a lot of traders' emotion, because you can see it went in your favor, come back down, went further in your favor, come back all the way down, retrace, almost hitting your stops, right? My stop loss is here, almost hitting my stops, and then it goes back all the way higher, thinking that, all right, this time the move is real. Starts consolidating once more, thinking that, you could finally break out higher, and then it reverses all the way back down and stop me out for a loss. Okay, so this is trading, right? Sometimes, while following your trading plan, right, you incur additional emotional, I won't say trauma, but you have to experience emotions that are not really too enjoyable, because you are trying to follow your trading plan. Imagine at this point in time, you break your trading plan, say, it's not going anywhere, right? Why not I just exit when price comes back into this range? And you exit. All right, okay? And maybe true enough, the market, actually do eventually hit your stop loss, but you exit at an earlier price, and you're glad that you save a few, maybe 0.03 or 0.04 R. But what happens if that you exit over here, and then the market starts to, rally? Let me redo this again. Let's say, for example, you exit over here, right? Thinking that you can save on your loss, and the market afterwards just rallies all the way up higher, and you're not in this move because you break your plan, because you couldn't stand the emotional aspect of trading. I mean, for me, this is going to hurt me really big, right? Big time. So I would rather just have my stops in place, right? I don't mind taking a full 1 hour loss, because if I know I'm right, I could get multiple R on this trade. Okay, so this is something that you have to bear in mind, really. And yeah, that's all I have for you in this week's market analysis. All right, we've run a little bit longer, and maybe that's because I didn't get a chance to speak last week, so I need to let everything out. So yeah, I hope you enjoyed this week's today's video. Right, if you enjoyed it, hit the subscribe button below, and you'll be updated whenever I publish a new video. With that, I wish you good luck and good trading. Right, any comments and feedback, just let me know it below. Talk to you soon.